Do you worry that an unexpected life event, like a sudden job loss or a serious illness, could turn your credit card balance into an unbearable financial burden? If that thought has ever kept you up at night, then you need to know about a specific type of financial safety net, group balance protection insurance. This isn't just another boring insurance policy. It's a key defense mechanism designed to protect you and your family from financial disaster when life throws a curveball. Most commonly, you'll see this offered as an optional add-on with credit cards, loans, or lines of credit from a financial institution. So, what exactly is it? In the simplest terms, group balance protection insurance is a group policy, typically underwritten by a third-party insurer, that helps cover your outstanding debt balance under specific, difficult circumstances. Think of it as debt insurance that activates when you can't work. It usually covers a variety of unfortunate events, including involuntary job loss, if you are suddenly laid off; total disability, if an accident or illness prevents you from working; critical illness, upon diagnosis of a serious, covered condition like a heart attack, stroke, or cancer; and life insurance, which pays off the balance in the event of your death. Here's the important part: how does it actually work? You pay a small premium, usually calculated as a percentage of your outstanding balance, that gets added to your statement each month. This means if you have no balance, you typically pay no premium. When a covered event occurs, say you lose your job, you file a claim with the insurer. Once approved, the benefits kick in. For situations like job loss or disability, the policy usually pays a monthly benefit. This could be a fixed percentage of your outstanding balance or the minimum monthly payment for a set period, like 6 to 12 months. This keeps your credit history intact and buys you time to recover without the debt spiraling. In the case of more severe events, like death or a covered critical illness, the policy is often designed to pay off the full outstanding balance up to a certain maximum amount. This is crucial for providing immediate financial relief to you or your loved ones during a crisis. Now, a word of caution: like all insurance, you must read the fine print. Coverage amounts, waiting periods, and specific definitions, like what qualifies as critical illness or involuntary job loss, can vary significantly between providers. You need to know exactly what you're paying for. Ultimately, for a small monthly fee, group balance protection insurance acts as a critical buffer, turning a devastating financial threat into a manageable temporary setback. It's a way to plan for the unpredictable and protect your financial stability. With that said, thanks for watching, and until next time.